Welcome back to our show where we have a panel discussing the movie Too Big to Fail, which documents the 2008 financial crisis. Just before the break, Michelle Davis discussed consumers' expectations not being in alignment with the 2008 economic conditions. What do you mean by expectations?
You never had class with Professor Atwater, did you, Dave? It's okay, let me sum it up for you. In an economic model, agents have to anticipate the value of variables whose realizations may occur in the future. The values they anticipate are often called expectations. Agents may generalize only from past realizations in a way that we can call adaptive expectations, or they may have other information from which they hypothesize a distribution from which the realization will be drawn. From such a distribution they can calculate the mean value, and variance, and so forth.
Wow. Sounds like the professor is doing his job. So tell me, why were capital injections the best solution for the financial system?
We had no choice. Buying the toxic assets was not going to work because it would have taken too long. It could have taken months for the impacts to be felt in the economy. A real solution had to be implemented immediately.
Let me interject here. Banks needed the money and the system was crumbling. Even if toxic asset purchases were expedited, it would not have been enough to save the economy. Plus, government purchases of junk assets would have nationalized the banks with insolvent assets. This would reduce consumer confidence levels. Cash injections were the fastest and most efficient way to stabilize the market.
It was definitely faster than buying toxic assets. And it pushed us off the precipice. We gave them the money and the banks had to lend it out.
But how do you get a healthy bank to accept a capital injection?
We had to arrest the stress in the financial system somehow. Therefore, through the TARP program, the U.S. Treasury purchased preferred stock in the banks.
So basically, they had to hand the reins over to the U.S. Treasury?
No, not really. The government became non-voting shareholders in the banks and it was a temporary measure to save the system.
The country was facing the worst economy since Great Depression. And if the financial system collapsed, it would have taken the entire banking system down. So the banks didn't have any other solution but to swallow the injections they did not really need.
Well, America, there you have it. So Hank, you mentioned TARP earlier. What is that anyway? A program for total arrogant righteous pricks?
Funny, Dave. TARP stands for Troubled Asset Relief Program.
Was TARP successful?
Well, it depends on how you look at it. If you think saving the world from a financial meltdown is considered a success, then yes, it was. We also did it in such a manner that did not cost the taxpayer anything because most of the TARP funds has been repaid and the U.S. Treasury Department netted a hefty profit from it.
So let me guess what the other half says. Why on earth would you loan out taxpayers' money to a bunch of pricks whose job is to make money? That is what I would ask.
Exactly. Many people felt that TARP was a symbol of big government at its worst, intervening in private markets with taxpayers' billions to save Wall Street plutocrats while average Americans struggle through the recession the financiers spawned.
We are just about out of time, so I have one more question. Did the banks use the money for what it was intended? Or did they take it and fly down to Vegas on their private jets to party at Caesar's Palace?
I hear you might know a thing or two about those types of escapades, Dave. Seriously, we will never really know how the banks spent the money because there were no regulations on how they should spend it. They seem to still be sitting on it and making fewer loans.
We did not impose regulations because we were afraid the banks would not take the money. It was very sensitive since the largest banks did not really need it and the chief executives needed board approval to take the funds. There is not much evidence that shows they lent out the money in the way they were supposed to.
I think I need a drink right about now. Thank you all for being here to break down the mortgage crisis and somehow the movie Too Big to Fail went down in conjunction with it. It was very informative. Hopefully this kind of history will not repeat itself.